Hello guys and welcome to another post-market analysis of Bank Nifty. Today is November 20th and this is the price action of Bank Nifty on a 5-minute time frame. But as usual, let's start from a daily chart. So here is our daily chart of Bank Nifty. So last working day we have discussed about this particular candle. This doji, the last candle that you see is today's price action formation, which in turn gave us a doji candle today. But before that, we were discussing about this candle where we were discussing about this tentative trend line getting break the last previous working day, that is on Friday of last week. So here we have also, I mean, on that particular day we have discussed also that if you see any particular a close beneath this, then we can take that as a confirmation candle and go towards the downside. Here, that is what has happened today. Bank Nifty has given us a confirmation towards the downside, but this is not a proper a bearish candle. This is a doji candle. So, and also, if you notice, this close is not below the close of previous low. We have seen a lower low, we have seen a lower high, we have seen almost a similar close. But if this close, if this was below this previous low, that would have given us even more stronger confirmation towards the downside. But anyways, is in today is a bearish close, a slightly bearish close. It was almost a sideways momentum, but it has seen a huge momentum towards the upside and also the downside. But still, this is a doji on a daily time frame. But we cannot come to a straightaway conclusion, because whenever market moves, it will not continuously move in a straight line towards in the downside or towards the upside. So what may happen is that I'm discussing about the possibilities. I'm keeping this line intact, this trend line which we have drawn intact. Okay, let me just readjust it. Okay, let's discuss the possibilities of out of this scenario. See, the possibilities are Bank Nifty may come down from here, but also there is a possibility, because you have a very steep rising a trend line on a daily time frame which we have drawn tentatively from there, from this lowest point. There is a possibility where we can see a pullback of these prices towards this to check this trend line also. So keep that in mind. So Bank Nifty, it's not a rule on the rock which says that it will definitely go down. Yes, obviously we have seen a breakout with a moderately confirmation candle, but still, since we have seen there is also a gap from, see, this day and the previous candle there. So this gap can also be, this gap may, or there is a gap of 500 points. So there might be a check of this gap as well. See, because we have a trend line which is going way towards upside. So otherwise, be prepared. Don't trade in a huge number of lots. Always trade in less quantities and be sure of your risk versus reward ratio, and be very sure before you take any trade whether you are capable of taking that particular that much of the risk uh, or not. Okay, so this is the scenario in the Bank Nifty's daily chart. And then now let's go back to our 5 minutes chart. I'll tell you, see, this line is coming from a daily chart, right? I'll tell you why I kept that line intact today. I'll explain you that. But before that, this is a 5 minute price action of a Bank Nifty today. And let's see, the Bank Nifty, we have seen almost a flattish opening, where we have seen a Bank Nifty open at 43,600 levels, and immediately the first candle that you see is a hammer candle. So for those who you are not completely aware of hammer and when to use the hammer, we have a very detailed explanation of what a hammer is and when to, in what scenarios you should use hammer and how to use it with a proper stop loss, and with all these details are there in our candlestick pattern series. I'll drop the playlist towards the end of this video. But yeah, the first candle itself is a hammer candle, and then the couple of candles, the first three candles, out of which two candles are bearish and there is one candle of a green color, but it is not very bullish. But as far as we can see, that the first candle has got rejected from this area sharp, from this line sharp, right? So after that, what has happened, if you notice, we have seen another hammer formation right there. Okay, that is a hammer which we have seen at 9:35 candle. So you might think that why not take a trade there if this is a proper candle, because usually on a first candle you will see a lot of volatility, and you see a very huge price movements towards up and down. So it's better always to leave the first candle, or if you're so confident about this candle, you guess you can also trade here, providing if your risk versus reward ratio is great. See, if you want to enter there towards the upside, if this is a hand rejection, if they has seen this has seen a rejection from the bottom, the proper entry obviously towards the close of this candle into the close of this candle. But if you want to enter there, where is your target? Your immediate target towards the upside is only that. But look at the risk. Your risk is way too high than your target, so that is why it is not recommendable when you see such huge risk to receive your small reward. Okay, whereas here at 9:35 candle the scenario is different, because this is a hammer, which is a rejection candle, which is a reversal candle. That's good, and it is also coming at a very important location, that is this rejection level that we have seen from the very first candle. So now 20 minutes into the opening, we have seen a hammer there, and this was a good chance to the entry, because there you have a very it is appearing to be, yeah. So here you would enter into this particular candle, and that is your exact first target, and your stop loss is just below that. Yes, both are fine. So the risk versus reward ratio in this case is exactly 1. Okay, so this trade would have been taken, and yes, of course, your first target is pretty much hit at 10:15. And we always say in our every video, whenever you see your target hit at your first whenever you see your a trade hits your first target, that is when we recommend to raise your stop loss from cost to cost. So that is what you would have done, that there was a chance for that, and then keep your target to next level, which is that. Yeah, if you see on the left, that is the next reaction, right? So it has also gone there, which means it has taken this candle also. Okay, now what has happened after that? Now when you are at your second target, you would again raise your stop loss to your first target, that is here, this line, and then keep trailing it until your stop loss hits. So the next reaction is this line. Okay, that was hit, and then again your next reaction is this line. So that is the max on the left that you can see from the previous day. Yes, of course, there was this line as well, so market has gone there as well. So all that you have to do is very simply control your emotions, and let the strategy, let your technical knowledge do its job. So in this case, market has gone all the way till there, and your stop loss, we have discussing that your previous, if the market is there, your stop loss would have been here. That means yeah, that was your stop loss. So let's take only this much, and now delete that line, excuse me, with this, and now delete this line as well, and this line as well. Okay, so this trade alone have given you 190 points towards the upside. And now what has happened after that is, this is again a bearish engulfing pattern, and also this green hammer, this green line that you see here is a hanging man. Okay, so if you want to know again the difference between the hanging man and even though both are similar formations, it depends, depending on where these candle formations are coming, they will be named as a hammer or a hanging man. Again, if you want to know what is a hammer and a hanging man is, we have a very clear and detailed explanation that has been delivered on these two candle formations in our candlestick series. So I request you to please tune into the candlestick pattern series and watch these videos. That will be quite helpful for you further. That will be quite helpful for your future trading. So I'll leave that link below. So but here we have seen a reaction, that is this, if this was the swing low, this is your swing high, and this swing high was maintained for half an hour. See, from 10:30 to, you see, 10:55, 11 o'clock, it didn't cross, we didn't see any candle getting closed there above this line. So this can be pretty much a swing, sorry, this much pretty much beat your resistance level. And also if you look at it from the left, from yesterday we have, see, 1 2 3, almost 3 times we have seen a price rejection from there on the left. So this is an already a rejection zone, where we have seen uh, a dual setup, two setups towards the downside. One is this bearish engulfing, and second one is the same formation, where you can see this as a hanging man, and with this as your a confirmation. And again, if that is not enough, again you have seen another bearish engulfing pattern there. But initially, because we have seen a two candle patterns here, and then which are coming at your resistance area, and then on your left your target is pretty much here. Okay, your target was pretty much there. Okay, so we have a good risk versus reward ratio as well. Before this lines, okay, if you want to enter, that was the ideal position for you to take the trade. So if you are taken that trade, you have seen a pretty good momentum towards the downside, and then after which you have seen market is going all the way towards it retraced almost till this line. Okay, and then from there it has seen a couple of candle formation, a bearish candle formation there. And then from, see, here you would have taken at 130, but then look at your reward. This is only your reward, and that much was your risk. So risk versus reward ratio was not that great. So yeah, this was the only possible a trade today that would have been worked. Yeah, this is towards the shorter position. Okay, and your stop loss was just above that, and your target was all the way till down. Okay, all the way till down there. So you might say that, yeah, your target was not hit, but then again, yeah, if you see the entire day, even your stop loss was not hit. But look at the kind of momentum it has made, almost till your target. Okay, almost till your target. Okay, it was just 507 and 504. That was just 3 points away from your target. But still for our case, let's think that, okay, let's assume that our target was not hit, that's why I've deleted that. And then you can it did also give you a chance, okay, to draw with this kind of price momentum. It has given you a chance to draw a trend line there. Now, to avoid visual confusion, I'm taking off these two blue lines from the bottom and the top. And see, when the market is here around 2 o'clock, you might have drawn this particular trend line, which has seen pretty much you can even adjust it after this particular reaction. Okay, so here we have 3 points, more than three times touch the prices towards this trend line. So, and also we have seen a breakout from this trend line, but then after the breakout, you immediately didn't see any confirmation candle. Instead, we have seen a green candle, after which we have seen a momentum towards the downside. So we expect some kind of a pullback towards this high, and then that after seeing a proper candle formation there towards the bearish side, then it can be a bearish momentum. But remember, this is today's formation where we have seen 190 points. But you remember the trend line what we have drawn from a daily chart, which is this particular trend line that we have drawn from the daily chart. Let me show you that again. So let me go back to our daily chart. Yes, here we are in our daily chart, and then see this line. Okay, so this big line that you see is the trend line that we are talking about on a 5 minute chart. Let me show that. Okay, so how is that trend line useful is, last Friday, today is Monday, right? So last Friday, uh, when you have seen prices open, see there. Okay, it has gone almost till this trend line and seen a bearish momentum towards the downside. Okay, see the kind of momentum that it made on Friday. Okay, so sometimes keeping those trend lines intact, keeping those trend lines um, in the chart will also help you. So if you want to correct it on a 5 minute time frame, if you want to correct it, okay, you should have corrected your trend line like that. Let me tell you. Okay, see, so I'm trying to correct it here with this reaction, and also with this reaction. Yes, I think it's corrected. Now if you see, price is clearly getting defended exactly at this trend line. Okay, so here you see a couple of bearish candles there, and also here for the second time, and then seen a great momentum towards the downside. So it is all about how you use your technical knowledge. It's not that only a hammer will give you profit, or only a moving average will give you profit, or only a CPR indicator will give you profit. No, every indicator has its own strength and weakness. So it's up to you when to use what, and it comes only and only and only with a proper back testing and a thorough eye on the live charts. Okay, so that's it for today. Thanks for tuning in. See you in our next post market analysis, and please do subscribe for more such valuable content.